G'day folks, welcome back to another update for natural gas and the ETFs. Now, natural gas has been consolidating since our last video. We're also going to include some back testing on what it's been doing and how you should have traded it. Don't forget to hit that like and subscribe button to support the channel. Also, don't forget, we've also introduced a new series called Pete's Investing Plus One series. It's designed for newbies in trading. So if you're brand new to trading, want to learn how to set up the charts and do the analysis, then these video series are for you. The first video we did was chart setup, and the one after that was money management, and they're both in the description below with the links for yourself to click on those. Now, in terms of the natural gas outlook, as of today, April 12, they're the ETFs for BOIL seeks to achieve twice the daily performance of the Bloomberg Natural Gas Subindex. KOLD aims for twice the inverse of the daily performance. UNG is designed to track the daily change in spot price of natural gas through near-month future contracts. In terms of AI data center and structural demand drivers, Goldman Sachs projects that AI-driven data centers will add up to 3.3 billion cubic feet per day of new natural gas demand by 2030, roughly a 10% increase in current US natural gas consumption. This is a long-term structural trend as AI workloads are extremely energy intensive, and most data centers rely on gas-fired electricity, especially where renewable supply is inconsistent. Power consumption from data centers could quadruple by 2030, accelerating utility reliance on natural gas in the near term. Geopolitical events, conflicts, example in the Middle East and Ukraine, and supply issues, pipeline disruptions, LNG exports, trigger short-term price spikes due to uncertainty or reduced supply. For example, tensions in Europe or extreme cold snaps cause LNG demand surges, pushing prices higher globally. These impacts are episodic but can be dramatic, driving daily, weekly volatility, especially for leveraged ETFs like BOIL and KOLD. So first, looking at the natural gas commodity price, we always look at long-term trends. So here with the monthly, that's broken above the moving averages of the price chart, and so is the CCI. And normally we expect the CCI the CCI 150 to track in the same pattern as the price. Otherwise, we look out for any divergence. There's no divergence currently on the monthly, but you can consider that a bullish momentum at the moment on the monthly. On the weekly, however, notice here we've broken down into that moving average range of the CCI, and also the price has just touched those moving averages. So it's giving us a somewhat neutral positioning, so potentially further declines to appear, or it could just bounce off there. We don't know yet, and we look at the that's why we look at all the time frames and get an understanding as to which way it's trending. Looking at the daily, you can see there, if we drew in all the indicators or the trend lines, you can see the CCI and the price have broken below the moving averages, and also starting to track in line with this descending diagonal trend line. It's actually broken through this previous, what was a support at 39.45, and now it's approaching closer to this next support level at 32.16. But again, you can see the momentum on the daily is still in decline on the CCI. Now if we go to the 1 hour chart, we see if there's any micro moves, and by micro moves I'm talking about any potential bounces or retraces. Back here since our last video, you see we did develop this higher lows on the CCI versus lower lows on the price. That's a bullish divergence, and that actually bounced. So if we were to draw a Fibonacci retrace from that low, take it back to that high there, you can see there our minimum retrace was breached, and that would have been between that 23-38% range. So that's already broken through that range, and it's currently bounced down from that 50% Fibonacci retrace. That what's now a resistance up 39.45 is the 61% Fibonacci as well. But at the moment you'll notice it's trending down this diagonal descending trend line. Notice though the CCI and the price have broken up through the moving averages, but again it's not time yet to go long. We want to wait for that to go long. You want to wait for the daily to break above those moving averages. At the moment, all trades should be short positions only. So taking short trades only, and what I've done here, I've got the back test for the stop loss approach and the back test for the average down, and they both start here when the moving average breaks below the when the CCI breaks below the moving averages, and so does the price. That's where we take these short positions only. We don't go long. And the stop loss approach, had you let it run throughout the whole period, would have generated 5,020 so far, and the average down approach is generated, it's still in a bit of a drawdown, but so far it's 6,400. And if you close that out at that point there on both of them, the stop loss approach generated 6,050, and the average down approach generated about 18,130. Now, this is where you look at for these bullish divergence in this case, going short. You theoretically should have closed out your positions when you started seeing this bullish move, this bullish divergence. So you can see there the first point would have been that trough there on the price versus that trough on the CCI. That was your first sign of a bullish divergence, and theoretically you would have closed out your positions around there. Now since then the price has declined, but notice the CCI declined further, but still the low there was higher than that low. That's still a bullish divergence. So at the very latest you should have closed out around this position, these areas around here. Now since then actually the price has declined, but not as much as this previous low down here. So we may see a further, as I said, we might see further upside from here as a result of this bullish divergence. But you can see there it's already broken through that 23-38% target range. So I'll quickly go through the ETFs, and here we've got BOIL. Now this is still below the moving average of the price chart and still trending. So far this month it's a bearish candle. There's no CCI for it, so it's a bearish momentum. On the weekly, if I zoom out, we did have this bullish divergence on the CCI versus the price, and that started back in 2023, and since then it's been still rising, and eventually the price also bounced off that low and it's actually gone higher. But notice we've got a bit of a retrace at the moment, so I wouldn't be going long on the daily if you're trading on the daily. Remember, we always trade in the direction of the higher time frame. So at the moment the weekly is declining, and so is the daily. So here on the daily, similar to the commodity price, that's trending down along this descending diagonal trend line. But more importantly, the CCI is below the moving averages, and that's giving us a bearish momentum on the daily. And if we look at the intraday chart, similarly on the 1 hour chart here, taking short trades only, and you'd be closing out the position once that daily, or stop taking short trades once that daily breaks into that moving average range. So at the moment, you wouldn't be going short because the CCI is broken above the moving averages and starting to trend higher, and so is the price just above that very narrow moving average range on that support line, or that descending diagonal trend line. So for KOLD is the inverse. So this is in a bearish momentum at the moment. It's below the moving average of the price chart on the monthly. There's no CCI for it currently drawn, so we assume that's a bearish momentum. On the weekly, it was bearish, but notice how we've broken into that moving average range. So it's giving us a neutral position. So don't go short on the daily if you're trading on the daily time frame. We'll wait for that to break below that moving average to take further short trades. At the moment, we've had the last couple of weeks of bullish movement on KOLD, so that's the weekly. And on the daily, it's bounced off this support line at 1621, which we've drawn some time ago. And that's also a result of this bullish divergence, higher lows on the CCI versus lower lows. It hasn't quite reached our target range yet. Not far to go possibly, but again, you can see the CCI is still rising, so still a bullish momentum on the daily. Going to the 1 hour chart, again taking long trades only according to the daily if you're trading on the 1 hour. So you only would have taken those long trades when they're above the CCI and the price moving averages. At the moment, because it's the inverse, it's going to the downside, so it's bearish at the moment, so avoid going long or short. Wait for it to break higher to go long, or wait for it to go short on the daily to take short trades on the 1 hour. Lastly, looking at UNG on the monthly. Now this is stuck its nose above that moving average range, but it's fallen back into that moving average on the monthly, giving us a neutral positioning, even though the broken above the moving average range. So cautiously bullish, but I would suggest more of a neutral positioning on the monthly. On the weekly, likewise, it's broken into that moving average range, giving us a neutral signal with a decline on the price towards its moving averages as well. Now, this could possibly bounce from there, or it can actually break further to the downside. So we'll wait to see what happens there. And on the daily as well, it's bounced off that resistance at 24.13 and continuing to decline since our last update. The CCI is still dropping, and so is the price below the moving averages. On the 1 hour time frame, we'll look at for any micro moves. You can see here we've got a bit of a bullish move on the last few hours of trade on the 1 hour time frame. The CCI has broken above the moving averages, and looks like the price will break above those moving averages in the next hour once it opens. So avoid going long or short until we see either the hourly break further to the downside, or if it keeps rising, we want to see the daily break above those moving averages to go long. So hold your trades until we see more decisive move. So again, thanks for watching. Don't forget, we've got these Pete's Investing Plus One videos which help you better understand at a lower level if you're new to trading in terms of analysis, and the last video we did was money management. So feel free to access that in the description below. Hit that like and subscribe button. Thanks for watching, and see you in the next update.